So I've been recently hearing a lot about these cash buyer programs where basically there's companies that give you the ability to mimic that you're a cash buyer, essentially tricking the seller to thinking, hey, I got one of them cash offers I was looking for. But really, it's like, nope, it's just me, just being disguised as a cash buyer. And I've tried to like sign up for one so I can get like a inside scoop to how it is. So if you have gone through this experience, I would love if you can comment below just explaining how your experience was. But what I'm going to do today is I'm going to evaluate one of the ones that one of my subscribers sent me. Annie Mac Mortgage is apparently doing one and make an offer they can't refuse. Kind of cute. Like Godfather reference there.
I'm going to make them an offer they can't refuse.
So I'm going to review it, the terms, and kind of see what I think and really express to you what my concerns might be, that if I were in a position where I were considering doing this, what I would look out for personally, and just the best methods of what I would do to try to avoid getting scammed or getting, taken advantage of, because there are a few things that make me nervous about this. But once again, look in the comments below. If anyone has had the experience with one of these programs, please let us know how it went. And, if you would recommend it. So first and foremost, let me explain why cash buyers are preferred and what these companies are basically doing and who they're really helping here. So essentially, if you were a normal seller and you're trying to sell in a traditional sale, like to a buyer with a financing, this is how the process would look like. So seller, this is their perspective, right? They have their house, okay? Their goal is to find a buyer that's going to love their house, hopefully, and treat it right. Buyer needs financing to... can we draw a money bag? Is that a money bag? Close enough, right? Need a money bag. And that money is going to come with a lot of basically hurdles that they need to jump over. So the hurdles for a traditional finance situation might be, okay, like you need to get an appraisal, okay? So we actually need to verify that the house is actually worth what the off price that we're selling it for. We need to make sure the buyer is qualified. And in a lot of states, specifically like Arizona, the contract protects the buyer tremendously. So up to 3 days before close of escrow, if you get a loan denial, you can basically cancel with no penalties and completely leaving the seller in the lurch, which is why every time I've sold a house, like my own house, I can never sleep at night, because I know even though everything seems perfect, if it's 4 days before close of escrow, they can still send a denial and completely screw me over. And that just terrifies me. And most states are like that. And then once they get their bag of money, then the house is already officially sold. So we'll do like with the sign that's sold. Okay. So this is the traditional thing. And what sellers are usually very concerned about is this stuff, right? Sometimes occasionally, I don't necessarily the lending provides it, but these type of buyers also, usually get an inspection and stuff like that. But really the appraisal and the fact that they have to qualify and there's like this external X factor that they have to worry about is the biggest concern. So a cash buyer comes in and goes, you know what? This is what we're going to do. We're going to give you this amount of money. And guess what? You don't have to worry about any of this. You find us, we give you the money, you sell it in your house. And therefore they're harder to resist. So that is why they're always preferred. Now, what are these companies exactly doing? Well, according to what I'm reading here, essentially, it's called the Annie Mac Cash to Keys cash offer. The way the cash to keys offer works is after a short due diligence period, you can have a home inspection and appraisal. I'm not sure how that works. Cash offer becomes non-refundable. Sellers knows that it will close for sure. So at this point, they give you the option to either have the purchase contract assigned to you, kind of like a wholesale deal, and they sign it to you, or you can just have them close quickly, which I'm assuming the majority of people do. And then after the fact, they basically sell the property to you at the same price, most likely through their financial institution. Now, I've heard of companies like Open Door that do something similar, where basically Open Door buys a property for you based on whatever offer you want, and then you finance with them essentially for whatever price and whatever financing that you qualify for. Now, it sounds like a good idea in theory, but just think about what this is really doing, okay? The only really advantage this is giving you, okay, is you're basically tricking one party in the transaction. Can you take a guess what that is? I'll give you a hint. We're tricking the sellers. That's all these programs are doing, is they're finding a way to fool the sellers into thinking this is a cash offer. So even though you're still going to have these concerns here, you're giving the seller the illusion that you're going to just be this, this, and this and sold, and really hiding this baggage to be dealt with later. Now, here's the problem. This stuff still needs to be dealt with. So here's some things that could happen. This is great for the seller. You get to fool them into thinking, hey, yeah, you know, we're going to be a solid offer and this is going to work out. But here's some things that you need to consider, okay? Once the house is the person, whoever bought the house for you, the cash program, whatever, you're at the mercy of whatever their financing is. I have a hard time believing that they're just going to let you finance with whatever lender they want. They're probably in it to make money. Duh, they're corporations. So they are going to buy it, and then they need it to finance through their lender, so that way they can get their money back and then some, basically, okay? This makes me nervous because normally there's this government entity called the CFPB that basically monitors and makes sure that all loans are done, you know, they're kosher, they're done through a process, and make sure the buyers are fully taken care of. Now, I don't know how this financing would work. Is it like a refinance, or it's basically doing a private sale to you? And are these private sales still under the same guidance of the CFPB? Like, what if they're trying to do these weird kind of loans where maybe because it's not, I don't know, it's just strange because it's a private sale, they're going to try to do some kind of weird seller financing or seller loan. I guess it might be okay still. I'm probably overthinking it. They probably still will do CFPB or whatnot, but because it's them, they're the ones originating the loan, it just makes me nervous that you kind of lose your ability to shop around. Like, it's one of the key fundamental things you need when you buy a house. Shop around your loan, shop around your lender, make sure that you're getting the best deal. Well, if they're removing that from you and you're forced to work with their lender, that makes me nervous. So one of the questions I would for sure ask if you're considering doing this program is, am I allowed to shop around my loan? Can I still, like, yes, buy the house for me? Thank you guys. Thank you, Daddy. Appreciate it. But do I have the ability to go get 3 or 4 loan quotes? If the answer is yes, then 100%, great idea, right? But if you're forced to work with their lender after closing, it's something about that makes me nervous. It's just like, why? Well, what if you charge me more closing costs? What if your rate's a lot higher than it needed to be? You're basically putting me in a position where I'm forced to say yes, and that is not okay in my position, or in my opinion, not my position. Now, the second thing that would worry me is the closing cost, okay? So, like, how does that work? So when you buy a property, there's title fees and there's lender fees and all kinds of stuff, right? So when they buy the property, technically in Arizona, the seller has to buy the title insurance, I believe, for the buyer, and then the buyer and seller split the closing costs, whatever the case may be. So there's always closing costs associated with the transfer or purchase of another house. So when there is another sale, man, I have terrible handwriting. It's because I'm trying to write it on a diagonal. So I think I just need to pick it up. Let me redo that again. Watch, it's gonna be super fancy now. To some people, it'll still not be as nice, but to me, it'll be nicer. So the second one, closing costs. Who is paying those closing costs? Are you the ones that have to cover it? And if you do cover it, who's getting that money? Who like, here's what worries me about Open Door all the time. Whenever they sell a property, they give you a price, but then they charge like 6, 7, 8% of like closing costs with their offer. And that doesn't get indicated on the final sales price because it's technically a closing cost, so it doesn't get reported on part of the sale. But what stops them from charging these closing costs at the end of the purchase? Once again, it goes back to that first point of being forced to go with whatever rules or standards they dictate. Just makes me really nervous. And once again, I'm speculating here, but what are the closing costs going to be exactly? And can I get some kind of evidence proving that these are the closing costs? One thing I would ask for if you're considering doing this and you're talking with them is please send me some previous sales. I like to see the closing estimates. I like to see, go ahead and remove any personal details, but I want to just see exactly you guys aren't charging me anything extra, because I don't want to be put in a position where we're going to close and then you guys are going to charge me an extra $4,000 convenience fee or something along those lines. And the last thing I would be concerned about is commission. Okay, just walk through this with me, okay? So if they buy a property from you, for you, I should say, they buy it for $400,000. Okay. So essentially, I would like to know: are they representing you, or do they have to have an agent? Basically, I'd like to know that, right? So they buy a house for $400,000, and let's say the commission was 2.5, 5%. That's not what the standard is. There is no standards in commission. I'm just using this as an example. Okay. So let's say there was $20,000 in commissions there. Okay. So your agent, the buyer's agent, got $10,000. The listing agent got $10,000. Okay. So I would like to know, and this is a question that you should ask, is who's going to be my buyer's agent? Because if they're going to be their own buyer's agent, they basically made $10,000 from there. Okay. So technically, since they made $10,000, they didn't buy this house for $400. They actually bought it for $390. Now, if you're allowed to use your own real estate agent when you're buying it the first time, then this maybe is a null and void point. But if they have to have their own agents or own representation where they're basically making that money back, they actually didn't buy it for $400,000. They bought it for $390. So at that point, so shouldn't we buy for $390 at that point if they really only bought it for $390, right? So I think really my point here that we should be very careful about is you want to make sure that you understand the whole entire details before you get into any kind of contract with these people. Make sure that the same rules and regulations are being applied with this private sale as opposed to the other one. Whoops, sorry, my calculator's out. I apologize. Make sure that they're the same regulations. CFPB is still overviewing everything, making sure what kind of systems are in place to protect you as the buyer, and just 100% make sure to have a really solid conversation. It's not as simple as we'll buy a house cash for you and we'll give it back to you at the same price, because they have to make their money. I would directly ask whoever I'm talking to, how are you making your money? Can you tell me how you guys make your profit? Because I want to know, like, I think there was a scene in The Big Short where the guy's like, how are you effing me? Like, how are you guys making your money?
How are you f***ing us?
And if you find the answer to that, then basically those are the things you gotta do. So anywho, that's all the time we have for today. If you guys are looking for an agent referral, you guys know you need to do. A link is in the description. Go to homemonday.com/Javier. Get yourself connected with a great agent all over the country, of course. And if you ever have any questions, you can always email me at contact@javiervidana.com. Thank you guys very much. I appreciate your time. Have a blessed day. Bye-bye.